So guys, in this video, we'll talk about 5 most frequently asked questions in the investment banking and valuation interview. Okay. So this is in the continuation of the past series, what I just started. The first very common question what you face in the interview of financial modeling and valuation, walk me through DCF model. काफ़ी सारे बच्चे इसमें इसको प्रॉपरली आंसर नहीं कर पाते. They directly start with the revenue projections. But ideally, you should answer this question like, okay, DCF valuation is based on projected cash flows. Okay, so it's a discounting of future cash flows. So in this process, we first project cash flows and then we calculate discount rate. This is my step 2. So calculation of discount rate, which can be cost of capital, WACC, or cost of equity, depending upon the cash flows we are discounting. Then in the third step, we will calculate terminal value because you have to do projections only for the limited period, right? जैसे अगर आपने 5 साल का मॉडल बनाया तो beyond 5 years क्या? So you have to capture remaining life of the business through terminal value, right? Then we need to add all the values, right? So terminal value discounted to the present value plus all the present value of future cash flows. You will add all the values to get the enterprise value. From this enterprise value, you make adjustments of all other stakeholders like debt you will adjust, minority interest you will adjust to get the equity value. So this is how you should explain process of DCF model, step-by-step manner. Okay, don't get directly into projections of revenues and on unless and until interviewers ask you how you project revenue. Okay, so this is one very common question which normally students fail, participants fail to answer in a proper manner. The second question, which normally faced by the candidates, how to calculate free cash flows to the firm. So many of the students and candidates, they are not clear about free cash flows calculation. What exactly free cash flows means and how it is different from the normal cash flows. So free cash flows means what? Cash flows available for distribution means which is freely available. Okay. So business earns, profits. And from this profit, whatever required to be reinvested in the business should be deducted to get what surplus cash business is left with. This is called free cash flows. Okay. So how we calculate this free cash flows? We can explain this in equation. We can say, okay, we'll start with the EBIT, earnings from the operations. Then from this EBIT, we will adjust tax part, taxes on the EBIT, so that we pay out tax to the government, and then what left after that. This is called NOPAT, net operating profit after taxes. In this, we make 3 adjustments. 1, add depreciation amortization expenses because it's a non-cash expense and it is already deducted from your EBIT. Minus CAPEX, capital expenditures, okay, and minus working capital changes. So minus working capital and capital expenditure, they are basically netting off the reinvestment requirement in the business. So what you are left with is free cash flows to the firm. This free cash flow is available for distribution to all stakeholders. So guys, this is question number 2. Very common question in the interview, and 90% of the candidates, with my experience, I'm telling you, 90% of the candidates, they are not able to answer this properly. This is a very basic question, right? So somebody is giving you finance job, they expect you at least how to calculate free cash flows, okay? Then the third question is how you do projection of the revenue and cost in the model. Okay. And people are not able to answer. They simply start with, okay, we'll start with the historical median, average trend. That's not right way to answer this. You should say, okay, first we'll understand the, basis of revenue. First we'll understand the business model of the company. Okay, from where the company is earning its revenue. Okay, then I'll see how this revenue will grow in the future. What are the revenue drivers? Okay, so suppose if I'm projecting revenue for a telecom company. So this revenue is based on subscribers growth, right? So I'll first need to project how the subscribers of telecom company will grow. Obviously, I can take reference on the past numbers, past trend in the growth in the subscribers. But at the same time, I'll look at the penetration level. What's the current penetration level in the industry, right? And how this growth will happen in the future. Second is, along with the growth in the subscribers for the telecom players, how my market share will grow, right? Because I cannot take all the market share. Okay, there is competition in the market, right? There are other players also playing in the market. So how my market share will grow or shrink in the future, and then I'll see so once I have estimated my subscribers based on my future expansion plans, based on the industry trend, based on the penetration level in the industry, Then I'll see what's my revenue per user, okay, which is called ARPU. So that's another revenue driver in the telecom industry. What's the average revenue per user? And I'll estimate this. Is it growing in the future? It is shrinking. It all again depends upon, guys, your tariff plans, competition in the industry. And we have seen over the last couple of years where the tariff is increasing every year. And there is substantial increase in ARPU of the telecom companies. So will this trend continue in the future? That there you have to take assumptions, right? So this will give you ARPU of the company. And then you multiply both, you will get revenue. So I'm telling you approach, right? It's not like you have to explain this way only or only this, talk about this industry, but I'm saying how you should explain revenue projections. It's based on the projection of drivers, based on how the revenue is dragged by the particular industry. You have to understand that industry first, and then you can do projection for a company. Then comes cost. All the direct cost, indirect cost, which is some cost is directly related to the revenue. So drive this with the revenue. Some costs, they are semi-fixed in the nature. So just see how the cost will grow with the change in the revenue and the scale of the business. So guys, this is how you should answer this question, right? Many people, they just say, okay, I'll look at the historical median and I'll apply that median for the future. That's not the right way. It's not necessary the company will grow in the future just like how they have grown in the past. There can be huge difference, right? Fourth question, which normally being asked from the candidates, how you deal with the sensitivity analysis in the models. Sensitivity analysis. So many of the people are not aware what sensitivity analysis is. And guys, sensitivity analysis is one of the most powerful tool in Excel models, right? Because when you create models, it's based on lots of assumptions, right? And you are not sure about those assumptions. Nobody's sure about those assumptions. And they can be small or large variation in the actual numbers, actual assumptions versus what you have taken in the model, right? So we will deal with this uncertainty through sensitivity analysis, like how the numbers will change due to change in my basic assumptions, how the output will change due to change in my basic assumptions. This is what sensitivity analysis, guys. So sensitivity analysis help you to see how sensitive your output is to change in the assumptions, to change in the basic assumptions, okay? And guys, fifth question which can be asked. So I'm not saying, these are the only 5 questions you should prepare, but I'm just telling you with my experience, what kind of questions you have to prepare. The fifth type of questions, for most frequently asked question, could be related to what kind of mistakes we do in the modeling. Most common types of mistakes, right? So guys, most common types of mistake could be the first, when you punch or hard code numbers, assumptions in the cell where the formula is supposed to come, right? So if there is a formula cell, obviously we highlight that cell with a different color. But many times, beginner, when you're starting with your career in the financial modeling and you don't know where to put formula and where to hard code numbers. So sometimes you overwrite formulas with the hard coded numbers. That's mistake number 1. Mistake number 2, circular reference. When there is an interdependent calculation in your model, then that creates circular reference. And you don't deal with this, then your model will always show that there is a circular reference and it will show some error in the model. So you should avoid that error. Third, you don't deal with change in one item's impact to the other statement properly. And you see many times your balance sheet does not match. Reason being, you have not taken double-sided impact of a particular adjustment, right? So guys, these are the common type of mistakes which you will face in the modeling exercise. And try to be on the top of it, okay? First, you should know what kind of mistakes are there and try to cover up this with the practice. More and more you practice the modeling skills, the better you would be in the modeling and the better you would be placed for this profile. Thank you.